topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Florida. Welcome to another Ask the Expert show, where we bring you the finest experts in the field of legal, health, financial, and home improvement. You know, a lot of people hate Mondays. I got to tell you, I love the first and third Monday of the month because that means Provise Management Group. And I got to tell you, I look back, Ray Farrar and I started back doing radio in Tampa, Florida, and just shows you how times have changed. We do our podcast, our TV and radio show now, and it's just, we're so lucky to have such a great expert as Ray Farrar. Good morning, Ray.
Steve, good morning. And yes, Mondays are difficult for some, but certainly not for you and me.
Yeah, exactly. I love the first and third Monday of the month. And I got to tell you, hey, I know you've got to have a crystal ball somewhere, Ray, because you turn out so many times to be right on. And we're talking about the future, and that's not easy to do.
Yeah, well, Yogi said it best. Predictions would be easy if they weren't about the future.
Yeah, exactly.
But thank you. You know, first of all, Stephen, a lot of it is just connecting dots, what I'll call common sense or thinking strategically when you're doing things. We're not right all the time, and certainly events are so fast moving that it's difficult for anybody to be right all the time. In fact, you know, I guess you can say if you're right 51% of the time, you're doing pretty well. But in any event, I appreciate the compliment. But at Provise, we look at everything on a long-term basis. We believe in financial planning, and we see investment management as a subset of financial planning. We have two offices, one in Clearwater and the other in Tampa, Florida. But we have clients scattered over 34 states, serving about 1,300 families and managing a little over $2 billion on behalf of our clients, scattered all over the country. And of course, we always offer a 1-hour free consultation to the listeners here at Ask the Experts. They can do it in either office or by Zoom, whatever is most convenient for them. And all they have to do is to give us a call at 1-800-633-3049, 800-633-3049, and just say, hey, I want to take advantage of that 1-hour consultation and I want to do it with Ray, and I'll be happy to sit and visit with you.
So, Ray, I got to tell you, we have been inundated by letters. And I think the reason they send them to us is because they want us to read them on air. But the number one question is, and I'll kind of paraphrase it. So the president said we have plenty of oil. We don't have to count on the Strait of Hormuz. But then you look at the prices of gas at the stations here. I'm here in Southeast Florida, and regular today was $4.15. People say they don't understand how they can say we have plenty of oil, and this oil was bought probably long ago at a lower rate. Why are the gas stations so high?
A lot of that's called free enterprise. So, so first of all, oil is priced on a worldwide basis. It's not just priced by country. It's a worldwide commodity. And so when oil rises, it rises across the world. It doesn't just rise in different places. Yes, we are energy independent. We are energy free. This is not like it was in the 70s when I was a young 20-something kid in the financial business at that time, when we had the crazy inflation that occurred. It's quite different today, but still prices are done on a commodity basis, on a worldwide basis. And that's why the prices are up. Obviously, the oil companies are going to sell to the highest bidder. And if the highest bidder happens to be in the United States, well, that's great. If it happens to be someplace else, then that's where they're going to try to sell it. I will say, however, that it is a bit perplexing that prices went up as quickly as they did, given what you had commented on, that this was oil, gasoline that was already in the pipeline. It was getting ready to be delivered. It was bought at a much lower price, et cetera. One of the reasons that you've seen energy companies, again, around the world, increase in price, their stock price, because the oil they're pulling out of the ground today didn't cost them $100 and some dollars a barrel to get out of the ground. It's significantly less than that. So the earnings, at least in the short run, of energy companies is going to look good. And so investors need to be careful when they look at energy companies today, and they need to think, well, how long is this for them the good time going to last? Bad time for most everybody else because of high prices, and even worse because of the war itself. Just be careful. We might see some pretty good earnings coming out over the next 2 cycles on energy companies, but hopefully the war will wind down here very shortly and prices will fall. Although I will tell you this will be my prediction, Stephen.
Okay.
Down much more slowly than they went up.
Exactly. We have learned that from you. I'm sure you've got clients ask you, what do you think we're going to top off at for oil prices? You see them continue to go up?
Well, there are those that have speculated that if the war dragged on for a long time, the prices could get to $200 a barrel. I think that was more somebody looking to have a headline and a quote in the papers somewhere. I can't say it won't happen, but it would be very difficult for prices to climb that high. And the reason is the demand would dry up if in fact prices went to that level. And when demand drives up, now the supply is bigger than the demand, prices have to come back down. So it would take an unusual set of circumstances for prices to go that high. Can't say it won't happen, but it would be very unusual. So again, the longer the war drags on, the higher the prices are going to stay, not necessarily go up from here, but at least stay at these kinds of levels. I do think, again, that if we're able to come to some agreement, either a ceasefire, open up the straits, et cetera, that prices will come down, but it's going to take a while for them to go back down to the pre-war prices.
We just got a text from Martin in Fort Lauderdale. I love your show. I never miss one of them. I watch both shows each month. Thank you so much for giving us such great information. What do you think about the jobs report that came out last week?
Well, Martin, thanks for your nice comments about the show. Stephen and I work really hard to try to make it not only informative, but hopefully a little entertaining as well. So, Martin, to your question on the jobs report, there was kind of good news and bad news mixed in that job report, and the bad news was kind of swept under the rug, if you will. And the bad news was that in the number in the two previous months, in January and February, the amount of jobs that were created were actually reduced by another 7,000. So that was a little bit of a true up. It certainly was a surprise to get over 50,000 new jobs being created, especially given that the war was going on during the entire month of March, and yet these jobs were created. A lot of it has to do with the fact that, in spite of what is happening in Iran at the moment and around the world, our economy seems to be holding up. Again, as long as this war doesn't go on for another 90 days, maybe it could get wrapped up in another 4 or 5 weeks, then the effect of it will be minimal on the economy, and thus minimal on jobs. And hopefully, with the uncertainty of tariffs behind us, the uncertainty of the war behind us, it would be reasonable to assume that jobs will be created very quickly once those two uncertainties have been swept aside. So I would look for a reasonably good, I won't call it strong, but a reasonably good employment picture for the last half of this year. And that's assuming that the war is over within the next 90 days.
Hey, Ray, if this is, I think, the 6th week now of the market, and I'm not saying great, but markets held fairly well under the circumstances. Are you surprised at all? And where do we go from here?
Stephen, but I am a little surprised that the market didn't take a even steeper drop than it did. It virtually got to 10% below its all-time high, which was just set in February. It now is cut back about half of that from the all-time high. And it's fair to say, as I mentioned earlier, that our economy is still reasonably strong, in spite of all of the things that are going on around the world, and it has held up. It's held up, I think, even better than most people think, because the Magnificent Seven have gotten clobbered this year. The best of the Magnificent Seven is Apple, which is, I think, the only one that is not down double digits at this point for the year. And when you think that those 7 stocks at one point made up over a third of the market weight, and the fact that we went on to set a new high, and that we have continued to hold ourselves up, that's a really strong signal in my mind. The Magnificent Seven probably were overbought. No, I won't say probably. It was overbought. Let's just face it. And it's probably fair to say that right now the Mag 7 on a long-term basis is selling at a slight discount. So I think they're fairly priced where they are. But with the advances that we would expect in AI, the advances that we would expect in technology over the next couple of years, and the application of the technology and the application of AI, we think that earnings for companies are going to be increasingly good. It could be bad for the job market, but I would remind everybody, historically, every time there's been a huge technological advance, think back to the days of the internet in the 90s, go back to steam engines, go back to automobiles. Everybody thought that we would lose jobs as a result of that. And in fact, we've continued to create jobs, and we believe that will happen going forward, but it may be in different areas than where we've seen growth in the past. In fact, if I had a young daughter or a young son thinking about going into a business for themselves, looking at any one of the trades would not be a bad place to be as we go forward. So yes, the market has held up extremely well, and in our opinion, even better than most people think, because of the significant decline in the Magnificent Seven that just don't look that magnificent anymore.
So gold's down almost $1,000 from its all-time high. Bitcoin has lost about 45% of its value. So now what?
Well, let's talk about gold first.
Okay.
I had a lady in to see me, late last year, when gold was just cracking the $4,000 barrier. And she had seen a fantastic run up. She had held it forever. She was definitely what I would call a gold bug. She said, I suggested to her that it might be a good idea to, sell a little bit and take some of that gain and put it back in the bank. And she said, no, it's going to go to 5,000. So I said to her, if it goes to 5,000, I bet you don't sell, because you'll think then it'll go to 6,000.
Right.
Well, she was right. It did go to 5,000. In fact, it went into the mid fives, never got quite to 6,000. And now it's down to around $4,700. So it's lost about 20% of its value. However, if you look at it over a 12-year period, or 12-month period of time, it's still up very significantly. So again, it kind of outran its supply lines, if you will, and as a result, it had to retreat and let the supply lines catch up with it, and probably is going to see itself steady itself for a while. However, when we look at Bitcoin, I am not a Bitcoin investor, because I do not believe that Bitcoin is an investment. I believe it is a great way to speculate with your money. At the beginning of the year, we said in our predictions for the year that Bitcoin would go on to set a new 6-month low before it would start to move higher again. And that was when it was in the 70,000s. Well, that prediction came true only in about 6 weeks. It did go on to set a new 6-month low. And in fact, it set several 6-month lows since then. It's continued to have a trend downward. Bitcoin today, if you're a chartist, there's some support value at $59,000. If it were to break below 59,000, you're going to see a flood from the running to the exits to get out of Bitcoin. And the Bitcoin people would tell you, well, yeah, but we're still up for the past 12 months. And I'd say, yeah, you are. But again, beauty is in the eye of the beholder. How much is somebody willing to pay for something that has no value whatsoever in the first place? It doesn't produce anything. It doesn't create any dividends. It doesn't pay any interest. And when I don't know how to value something, it's not an investment in my mind. It's pure speculation. So gold has been a store of value for a long time. No reason to think that it won't be continuing into the future. And Bitcoin will destroy as much wealth as it creates.
This is, we just got a text from Ben in St. Petersburg. That's your part of the woods. He said, my son has a little bit of money. I have learned I really trust your opinion on things. I don't know whether he wants to invest his money in either gold or silver. What are your thoughts? He doesn't have a lot of money, but enough that he could afford either one. What do you suggest, gold or silver?
Probably neither. I have to be really careful here, Ben, because you didn't tell me how old your son is. You didn't tell me what percent of his net worth is going to be, in it. You didn't tell me where he is in life. I'm going to set the stage and answer the question in this way, assuming that he is a relatively young man, and that doesn't mean 5 or 6, but I'm talking about maybe somebody who's in their teens or early 20s. But this would apply, I think, to most younger people, and that would be there's no better place to invest than in the American free enterprise system. This country has done nothing for 250 years but create wealth time after time after time after time. And rather than put money into gold or silver, I would strongly recommend that he look to find a Standard & Poor's 500 index fund. Most of the major mutual funds have a mutual fund and or an exchange traded fund, an ETF for the market. And that's where I would suggest that he invest that little bit of money, and I would not invest in gold or silver.
So, Ray, your show goes by so fast. We have a show in 2 weeks, 9:00 Eastern time. I've got so many questions here. I'm telling you, I'm going to use these questions for our next show. But we'd like to, when people text us, we like to get those texts in because we know you're watching the show. Tell people how, and you've got the greatest newsletter. Tell people how they can subscribe to your newsletter.
Sure. We call it the Provise Perspectives, and we send it out every 2 weeks to our clients, our friends, and prospective clients. It hopefully is thoughtful in terms of talking about tax law changes, the market, financial planning ideas. And so all you would have to do is to send me an email at info@provise.com, and that's info@provise, provise.com, and just say, please put me on the newsletter list, and we'll add you to the list. For those of you who would like to take advantage of our complimentary 1-hour consultation in our Clearwater or Tampa office or by Zoom, you can send an email request to info@provise.com or give us a call at 800-633-3049, 800-633-3049. Tell them you want to set up that complimentary 1 hour with me, and I will be happy to visit with you. And Stephen, we're just so appreciative of all the listeners and the nice reviews that we've been getting over the many years you and I have been together.
I got to tell you, Ray, God bless us when we got together. People love your show. They love your advice. It's so obvious why your company is so successful, and it's been so successful for your clients. And thank you. I hope you had a wonderful Easter. Can't wait for our next show. We'll see you in a couple weeks. Take care, Ray.
In the meantime, you take care as well, and thank you to everyone.
Okay, that's Ray Ferrara, Provise. We're going to go to a quick break. When we come back, we have more Ask the Experts.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.